Hello, everyone. Welcome back to my channel. Haters are going to hate, but for you guys, I have nothing but love. I love you all. Yes, I am so happy to have you guys here for this new video. And I have another spanking dimension on a very popular trading system. So with this trading system, we'll be using I was about to mention what we'll be using. But before we get into that, I want you guys to like the video and subscribe. Subscribers, your subscriptions help me, and the subscriptions also keep you here so you guys can catch the next video where I teach you guys something special about the forex market, for example. Also, if you like it, you promote it on the YouTube, and YouTube does the sharing for me so I can reach other people who are struggling and people who are maybe intermediate or whoever needs any help in the market, I'll be able to be of help to them if you do hit the like button. So I do encourage you to do that. Thank you. Thank you very much for doing so. So let's get into it again. The video. So in this video, we're going to be using in this strategy. In this strategy, we're going to be using a Bollinger Bands and a moving average. So what a moving average does is that we'll be using an exponential moving average of a period 200, which is a very, very high period. What the moving average does is that it tells us where the trend is, right? And if you've been in the market for any period of time, you know that the trend should be your friend, right? But to know your friend, you have to know at least like where the trend is heading, right? You have to know who your friend is. And that's why the moving average is there. The moving average is able to help you over time understand the current trend of the market. Okay, it doesn't mean where price is exactly, like price will go infinitely in one certain direction or not, or it will reverse instantly. It doesn't really mean that, but moving average just gives you an idea of the current trend, like where it is. So if prices above your moving average, you are looking at prices rising, right? You're looking at an uptrend. The price is below your moving average, you're looking at what's a downtrend. And this is the premise of the trading system, and it's what you are going to look at. So you have Bollinger Bands and the Bollinger Bands, and I'll draw them. I have them on the chart data, but like your Bollinger Bands give you an idea of, what do I say? They give you an idea also of the trend, right? And they give you an idea of the boundaries of price. And if price is in a downtrend, right, that the moving average assets that the price is in a downtrend, then you are looking for any rejections of your Bollinger Band on the upper side, and then the same thing for the lower side, right? If price is you know if the price is making higher highs, then you're expecting bounces off of the Bollinger Band downwards, and then you buy off of that, right? You buy off of so if let's say you get a spike here, and again next bullish candle, you buy off of that candle, and I'll be demonstrating that in the next few trades. But yeah, that's basically it. You let the moving average tell you where the trend is, and your risk reward is about 3:1, 4:1, whichever one you choose. Yeah, that's pretty much it. And also for this trend, you don't move your stop, you just allow price to play out. Make sure you put your stop loss in like near structure, put your take profit to near structure, right? And it makes sense to target the lower end of the Bollinger Band if you are going for a sell, or the upper end of the Bollinger Band if you are going for a buy, for example. So hopefully this piece of data will be able to help in the larger in the larger sense. Excuse me. Okay. So let's add price indicators, and I think indicators are already added, right? And you're on the hourly charts. You have a Bollinger Band 20 period, makes sense, and then the MA calendar, that's the EMA, also has a period of 200. So just keep that in mind. Two simple indicators, and let's see them play out. So you have the moving average, it's already shown, but the Bollinger Band is waiting for the 20th candle. And we have the 20th candle now. So let's go and see what price that's at. So at this time, price is below the moving average. You're only looking for sell. Right? You're only looking for sell. And that means you're only looking for bounces off the upper end of the Bollinger Band. That uppermost boundary, that's what we are looking for a bounce of. Right? Let's get that. Price seems it's very strong down there. G. So this is prime opportunity for us to get here. If you guys can see, Right? We have this rejection of this high. And let me go back one candle, right? You see, ideally, see this candle is a rejection, and then there's this lower price, right? This um, lower price is coming, showing you that the rejection has been met, right? So you could probably have, you know, a buy stop here. Hey, sorry, a sell stop here, right? Two lots. And have your stop loss above this or above the Bollinger Band or into structure, right? And I prefer you look into structure and see in a sell low equity. So you can have your stop loss all the way about here, right? Structure is here. And then you are selling, right? Uh, and then the price keeps moving. Who knows how it will turn out, but it's going, and price did, 1 to 1 here. So at this point you could have moved, and I remember if we can, but at this point you could have moved the stop loss, break even. For example, if you wanted to manage it in this way, um, and again, sorry for moving it too quickly, but again we have another rejection of the upper end, right? We have that here. Rejection of the upper end here, right? And this candle is kind of like telling us that it's coming full circle, right? So you want to sell at this point, market order, and this structure is 210, so you can just have it above, which is also fine. 41 piece being right. Times 3 is about 120, right? Let's see how price goes. Yeah, so we had it hit, right? Let's keep going. So we are looking, because our price is below our moving average, we are looking for what sells. That's exactly what we're looking for. We want to follow the trend. I'm looking for these reversal spots where there's this bounce of the Bollinger Band upper side, which you can also see here, right? There's this bounce here off of this upper side, and then we go down. So, I mean, it's fine to take a few losses, knowing that you will win eventually. And in fact, again, we are speaking too much, and I'm not being able to concentrate as much. But I want you guys to see this, right? You have this touch of the Bollinger Band. How to get back a few candles? Touch of the Bollinger Band. It seems there's a rejection after this candle, right? You can see this candle comes out of the city. Let's say you're even anticipating that price will break this low, for example, or this week. You could have your stop loss 79 pips. It sells stop here, and price will break it. And then we already know price breaks. I don't know if it goes to TP, because especially if you have a TP like 3 times or twice, or you are risking, um, and, trying to manage the open position. We are using 2 times here, right? And price hits our TP, for example. So we are looking for any other retracement, for example. And again, right, we seem to have a rejection here. On this upper side, price is still way below our moving average. So what are we looking for? Looking for a sell. Just here. Stop loss about here. 7 pips times 2 times 3. And price didn't trigger, so it goes higher. So we can see another rejection here again, right? This rejection. So what do? We're anticipating just a more lively candle to break it. We have our stop loss just above the high. We're risking about 59 pips. 59 times 3 is about 180, for example. So we got triggered, and price came straight hit our TP. Straight hit TP. But yeah, these are very good examples of the self setups, right? So if it was the buy, price have to be above the moving average, right? And then you're looking for these kind of reversal zones. That's what you'd be buying. That's pretty much it. So let's see. Let me go back a few candles. So you see this rejection. And I know we all know that this would have been a loss. But like, let's say you sold here. had your stop loss just above it, you're selling, you'd have lost, but at least you are being consistent with the trading strategy. And again, we have another setup here, right? We have this, you guys can see there's a rejection, a close inside, and we can sell, right? Have a stop loss just about the 66. Probably even go times two. And looks like to hit our tip. Sorry, our stop loss. Anyway, so prices ten had two losses in it. It happens. If you were managing this trade, maybe 1 to 1, you would have been able to secure some profit, right? If you were saying, oh, I'm waiting for 1 to 1, for example, 65 pips, and you wanted to go stop loss to break even, right? That could have also been a small win instead of a loss, for example. That's why I emphasize sometimes, having moving your stop loss when price moves in your direction. Prices above it, it's come below again. So we are looking for these sales now. And this is kind of complicated, right? Because prices above it's kind of below. I just don't want to deal with this one. So if you guys can see this one, right? Right. If you sold it, would have made money, but it's so complicated for me to have any interest in it. But we have something which is less complicated here, right? A rejection and a close back in on the upper side. So we are looking for what to sell. And price, it's sorry, our stop loss. Another losing trade, but we need to fight another thing. We are up about 8,000 bucks. It's a bit confusing here again. But we have this here, right? We have this here. It's bouncing off of the Bollinger Band. You can have stop loss just below it, about 60 is another losing trade. Can't get it now, but then you look at your risk reward and the trades you've already won, right? You have 6,000 plus and a $10,000 account. That's like plus 60%. And then we're waiting for the next trade. Price seems to be consolidating around the moving average. So that's just something that happens. But when it goes back into trending situations, we'll be making to the core what this strategy is all about. Right? And in fact, let's say for the last setup, maybe you weren't sure because you have this setup, and I have to go back a few times, but this setup is kind of weird. But it really is not. You have a rejection, price closes below the moving average, right? And then rejection of the upper Bollinger Band. So this one could technically be a sell for you if you want. It still meets the criteria. Price is closes below a moving average. There was a rejection, right? So we are risk number 52 pips times 3 would have been, for example, and we all know that price goes straight to our TP, but it's just like a show of like how dynamic the strategy can be. But what you have to keep in mind is that if you are in sales, you are looking for what taps. Like if you're in sales, or if you have been told by the moving average that prices in a downtrend, you are looking for points where there's a reversal in the original direction, or in the original bearish direction, and you have that. So maybe in a longer video, if I'm able to get more than 100, I'll be able to do this over maybe 20, 30, even 50 different trades. Hopefully, I'll be able to show more buy setups, right? Because we did miss a few buy setups, and I know they were hard to see because, again, they can't happen here, right? But it's below the moving average, so it doesn't count. We eliminate based on that, and it's a bit hard to swallow, but that's it. That's all we have for today. So hopefully you like the video, subscribe, and I have more content for you guys. So hopefully you stay around.